Welcome back. There are new signs today that inflation remains a threat to the U.S. economy as President Trump's sweeping tariffs take hold.
It is time for a little money, power, politics. The Labor Department published new numbers on U.S. wholesale prices today. And spoiler, they are much higher than expected.
There are modern signs nowadays that swelling remains a danger to the U.S. economy. As President Trump's clearing taxes take hold, it is time for a small cash control. Legislative issues. The Labor Division distributed unused numbers on U.S. discount costs nowadays. And, spoiler, they are much higher than anticipated. New numbers from the financial front have painted a picture that's raising alerts over meeting rooms and government workplaces. The most recent information appears discount swelling, climbing strongly final month, a move that might swell into everyday consumer costs within the months ahead. Behind the numbers may be a chain response. Businesses paying more for merchandise and administrations, supply lines fixing, and those weights in the long run spilling over into regular costs. It's a move that challenges figures, unsettles markets, and strengthens troublesome choices for companies and families alike. How long can these rising costs be retained? Sometime recently, they hit difficult at the checkout counter. And what will policymakers do if the weight keeps building? The report uncovered a year-over-year increment of 3.3% within the costs businesses pay, well over the 2.9% financial analysts had anticipated. On a month-to-month premise, the hop was indeed more shaking, a 0.9% rise compared to an expected 0.2%. The surge traversed both products and administrations, from items like nourishment to administrations such as discussed travel and hotel stays. The increments were wide and intense. July's information broke from the more uneven development seen prior within the year, stamping a sharp upward turn that has caught the consideration of financial analysts and commerce pioneers alike. One of the foremost striking drivers was nourishment. Costs paid by businesses for nourishment climbed 1.4% in a single month. Inside that, new and dried natural products and vegetables stood out, bookkeeping for generally a quarter of the full rise in products costs. The causes here are complex. The Joined Together States imports a critical sum of vegetables. However, much of it comes from nations not confronting overwhelming duties. That proposes other powers are at work. Conceivably, labor deficiencies connected to migration arrangement, unstable climate conditions influencing harvests, and higher transportation costs, which themselves rose in July. On the administration side, transportation and warehousing saw soak picks up. The Exchange Administration's edge, the markup businesses apply, moreover expanded, indicating to a conceivable move in technique where companies pass more of their rising costs on to clients. Travel and lodging costs surged as well, with in rates alone rising 3.1% from June to July. That bounce was particularly striking given that June's levels had been generally repressed. This thing since higher discount costs make a problem for businesses. In the event that they retain the increments, benefits take a hit. In case they pass them on, customers confront higher costs. Each choice comes with results. Not as it were for companies and family units, but moreover for the more extensive economy. Including to the complexity, the harbor of Los Angeles detailed moving more than 1 million holders in July. 8% increment from the past year, and truly trending up 5% on the year in terms of imports that they're bringing into the harbor. The timing recommends numerous businesses surged shipments to defeat tax increases that were set to require impact in early imminent. Indeed, in spite of the fact that there has since been a 90-day pause on a few of those duties, the preemptive surge in imports cleared out a clear check. Agreeing to harbor authorities, this shipping surge was likely a brief spike. They anticipate volumes to return to more normal levels for the remainder of the year. But this front-loading of merchandise too adjusts with the expansion picture. Businesses were buying intensely, regularly at higher costs to secure supply. Sometime recently, duties included more costs. That kind of bulk buying can thrust up short-term discount expansion indeed, on the off chance that it incidentally keeps retail costs in check. The maker cost list, or PPI, could be a key degree here. It tracks what makers pay for merchandise and administrations and serves as a driving marker for future customer costs. The July numbers spoken to the biggest month-to-month upside astonish in a long time. That kind of startling hop complicates the work of the government save. which has been weighing whether to cut intrigued rates to back financial development. Treasury authorities had as of late proposed the plausibility of a critical rate cut at the Fed's September assembly, but information like this makes such a move harder to legitimize. When discount swelling runs hot, bringing down rates risks stoking buyer swelling, possibly undermining the Fed's broader objectives. The PPI too offers understanding into the financial temperament, whereas the customer cost file reflects past cost changes felt by family units. The PPI looks ahead. It appears how companies are considering approximately estimating within the future. The message from July's report is that businesses see upward weight on costs and are likely planning to raise their possessed costs to cover them. The surge in imports ahead of duty due dates may have deferred a few of this impact prior within the year as companies depended on stockpiled merchandise. But presently, with those saves running down, the weight to raise costs seem escalating. At the political level, the swelling wrangleabout has taken on a curiously sharp tone. White House authorities have more than once pushed back against claims that costs are rising. In later weeks, the president has transparently criticized organizations and investigators who recommend something else. That included a pointed trade with a driving speculation bank over a report concluding that U.S. businesses have borne most duty costs so distant, but that buyers would inevitably bear the lion's share. The bank stood by its discoveries, clarifying that whereas businesses may at first retain higher per-port costs, advertised flow tend to thrust those costs toward customers over time. Their gauges proposed that by the drop, shoppers may be paying around 2/3 of the tax-related increments. In case those projections hold, the another few months seem uncover the genuine scope of the duty affect. Pressures over financial informing have not been restricted to taxes. The president has too addressed the exactness of official labor information when reports fall flat to coordinate his favored account. Such debate can make instability, making it harder for businesses, speculators, and buyers to arrange. Parsing the current information is challenging since not all segments are influenced similarly. A few businesses like discount apparatus fabricating show up to be confronting more honed, fetched weights from duties than others. These segment particular impacts shape the by and large swelling drift in ways that wide midpoints can't completely capture. For companies on the ground, the picture is regularly clearer than in national measurements. Commerce pioneers can see taken a toll patterns in genuine time inside their supply chains and their reactions. Whether to raise costs, cut costs somewhere else, or alter sourcing are what eventually decide how swelling moves through the economy. In July's information, the apparatus division battles were one clear sign of tax affect, whereas nourishment and transportation reflected other powers such as climate disturbances, labor deficiencies, and vitality costs. Those subtle elements matter since they point to where swelling weights might continue and where they might ease within the months ahead. The combination of solid per-port movement, surging discount costs, and political grinding over financial information has made a complicated scenery for policymakers. The government save must adjust the chance of abating development against the peril of letting expansion climb unchecked. Businesses must explore erratic demand and unstable supply costs. Customers in the interim may discover that the prices they face within the drop see exceptionally distinctive from those they saw within the summer. This is often not a minute formed by a single calculate, but by the meeting of numerous universal exchange debate, moving climate designs, labor advertised strains, vitality costs, and the vital choices of companies reacting to all of them. Each plays a part within the direction of swelling, and each has the potential to modify the viewpoint in sudden ways. The months ahead will test how versatile both businesses and families can be. Discount costs are a driving flag, and July's surge recommends that strength will be challenged. If past designs hold, the total impacts will gotten to be obvious as supply chain weights channel down to store racks and buyers start to feel what makers have been confronting for months presently. As talked about over, businesses have been retaining the affect of Trump's tariffs for months, but the most recent information appears that will be beginning to alter taken a toll for makers and producers climbed strongly in July, signaling that higher costs may before long make their way to buyers. Unused figures from the Bureau of Labor Insights uncovered that the maker cost file, a key degree of the normal alter in costs paid to makers, rose 0.9% from June its biggest month-to-month pickup since June 2022. On an annually premise, discount costs expanded 3.3%. The hop came in distant over financial analysts' desires, which had called for a unassuming 0.2% month-to-month rise and 2.4% yearly development. The PPI frequently acts as a caution sign for what consumers may eventually confront, and this report proposes a more grounded inflationary wave may well be shaping. Financial analysts pointed out that the PPI avoids imports, meaning the complete inflationary impact can be thought little of. As one investigator put it, makers are starting to feel the weight from higher duty-related costs, and it is, as it were, a matter of time. Sometime recently, much of that burden is passed on to inflation-weary families. Markets responded rapidly at the opening chime. The Dow dropped 175 focuses. The S&P 500 slid 0.35%, and the Nasdaq Composite fell 0.3% sometime recently, recuperating a few ground afterward within the morning. The numbers contrasted sharply with prior within the week when the customer cost record for July had appeared. That falling gas costs made a difference control in general customer expansion, indeed, in spite of the fact that merchandise touchy-to duties were still rising in fetched. A few examiners depicted the PPI discharge as a shock to the story that expansion was facilitating. It underscored the plausibility that trusts for a insured, intrigued rate cut from the government save following month may be untimely. Dealers scaled back their wagers on a September rate, lessening nearly quickly after the report. Center PPI, which strips out the more unstable nourishment and vitality categories, too surged by 0.9% in July, pushing the yearly rate to 3.7%. It's most noteworthy since walk. Whereas PPI information is regularly more unstable than CPI, certain shifts are drawing specific consideration. Much of July's increment came from the administration's division with acquired capital hardware costs, spiking 4.5%. Financial analysts famous that estimating weights once concentrated in mechanical merchandise focused on by taxes are presently spreading into services. This pipeline weight implies inflationary strengths can be moving more profound into the economy. On the good side, nourishment costs were the most driver of the month-to-month pickup, with rural items appearing the foremost emotional changes. Crude agrarian merchandise hopped 12.8% from June, and new and dry vegetables saw a stunning 38.9% month-to-month increment, the biggest since WALK 2022. Examiners tied this specifically to duties on Mexican agrarian imports, caution that such spikes might before long channel into basic needs store costs. These improvements include weight to the contention against an quick, nourished rate cut. Whereas more smoking knacks anticipated expansion is critical, a few financial specialists still accept the central bank will keep its essential center on the labor showcase. The most recent employments report appeared a pickup of 73,000 employments in July, well underneath desires at the side, descending modifications to past months' business figures.